breakdown is happening in full force. That's from the head and shoulders pattern, which we identified early on in this week. And we are fast approaching the key levels of support. The question is, will we get a bounce there? That's what we're going to address in today's show with a whole lot more. You can see based on the crypto bubbles chart over here that on the daily, most of the coins are red. So getting absolutely annihilated over here. Let's see on the hourly if some of the coins are already starting to bounce. Just get that off. And you can see some of the coins bouncing. You have BGB, so the Bitget token, 𝗕𝗏𝗕𝗚𝗏, 𝗕𝗨𝗏𝗏, and injective protocol. So we'll cover the exact levels. The big question that we have to ask ourselves now is, where are we within the cycle? The psychology of a Wall Street cheat sheet over here. So the psychological phases that we move through, are we in the approaching at least the depression phase, or are we still potentially in this disbelief phase? I think that everybody can agree that we're probably in one of the two. Let me know in the comments, what do you think? Where are we within the cycle? Look at the sheet over there and then type in the comments in the chat box below where you believe that we are within the greater Bitcoin cycle. So looking at the charts over here, first and foremost, on the monthly chart, we have taken out officially the previous month's low, and that's not technically a good sign. This is where you expect to see quite a quick continuation towards the downside. We're looking at the 7, the 20, and the 50 moving average on the monthly chart, and you have some support which is coming in. You have the 50 MA, which is an important one, very, very important level to hold as support. We were using that as resistance for a long time, and eventually we broke through and we said market structure is really starting to shift around here. And then the next one below that is going to be the 7. So as I've told you guys before, when you use these moving averages, oftentimes when they start to cross and they converge into one another, it creates a magnet type scenario, and that works both to the up and the downside, and therefore you can expect that there would be some sort of retest coming into the zone, and it could be a buy the dip opportunity. We'll get to that towards the end of the show. So Renko called it absolutely beautifully. If you look at the Renko daily candles over here, basically it turned red coming directly into resistance. So it was prior support 1, 2, and then we broke it down over here. On the third touch, we had an order block over there which led to the major sell-off. And then I said to you guys, you can't expect that you're going to smash through this level on your very, very first attempt, which is why I had bought at $19,700 Bitcoin and I sold everything. So it was down here and I sold everything coming into this resistance at 28,500 was my average selling price. Now I'm looking to potentially get back into the market based off of a dip scenario. Renko, and we're using Renko just as an additional chart to get confluence across the board and see how that lines up with the other levels that we're looking at. Renko is calling for $23,991. So let's see. We'll revisit this chart in the future. It's a very slow moving one. Next, we have the Pi cycle bottom indicator, which we outlined as well earlier on this week. That called for the bottom over here. Of course, black swan events happened, which was the FTX collapse. Price did go lower than when the Pi cycle bottom signaled that the bottom was in. And now you're looking at the moving averages, right? So you got the 111, which is the green one that's trailing up. And we know based off of our previous bull runs that we've had, if it is indeed a bull run, it means that 111 moving average should hold as support, and that's coming in right now at 20. Let's put it precisely over there, 25,931. So we're really coming into a very, very critical level where you as a trader or an investor who's participating in this market will be faced with the decision, are you going to be buying the dip? Are you going to be adding to your positions? Or are you going to cut your positions if we start to go below that? I'll leave that up to you. That's not for me to answer. So next, very, very important. This is what creates a little bit of a change in behavior for me is the Lucid 𝗧. The Lucid 𝗧 has been broken as we outlined. They act as support over here. Stop and reversal indicator, broke it to the downside. The 𝗧 popped up above over here, and this is now truly your breakout level, and it will continue to remain that way. So let's say, for instance, price does start to come back up. You see price come back up towards this level. Then all of this I would be treating as serious resistance until such time as that breaks, because not only will you be breaking the prior top, which we struggled to get through, which is coming in at $30,444, but you'll also need to take out that Lucid 𝗧. So very, very important and critical zone to get above in the future. You'll be wanting to pay attention to that. And then if you look at Ethereum, Ethereum is now also officially, as of today, broken its Lucid 𝗧 down. So Lucid 𝗧 is now popped to the top, signaling that it's broken down. And would you have a look at that? It also lines up with the breakout level over here, which is coming in at 2,118. So this is more for the high time frame traders, right? If you are looking at a weekly chart and you an investor or swing trader looking at very, very long positions that you want to hold, those are kind of the levels that you're looking at. And now we've come into the breakdown level. The breakdown level for Ethereum I had at 1790. Once you see a close below that, you can expect that there could very quickly be continuation towards the downside, and you could potentially even go as low, I know as crazy as it sounds, as low as the bottom of the Gaussian channel. Now, will this happen today? Of course not. This would take time if that were to even happen, because it's very, very dependent. And I want to be clear on that. It's dependent on how this candle closes. If price starts to get demand kicking in and you quickly close back above the breakdown level, well, then you can say that that was a shakeout and that was actually a buy the dip opportunity. But until the week closes, we won't have that information. So we'll have to revisit it coming into next week. If you do get towards the bottom of the Gaussian channel, that would only happen over time, right? So it would take a couple of weeks. You would expect a lot of bounces along the way. First area of interest for me personally on Ethereum is around that 1650-ish level. I'd be looking for a big bounce off of that, and then we can reevaluate from there. Okay, S&P 500. The crazy thing is the way that Bitcoin's selling off over here. You don't even have the S&P 500 futures turning down yet. So you can see still currently pushing up against resistance though, and really the gray area continues to remain resistance. We don't really have any trades on the table for the stock market or traditional markets until such time as we get into the extremes. As traders, it's always best to take your trades near the extremes. That way you reduce your risk, and that extreme is coming in all the way at the top of this expanding megaphone, as well as the top of the gray box area at 42.24, and then on the bottom side you're looking at also the 0.75 level of our range, which is coming in at 40.50. So we'll continue to watch that. The dollar's been consolidating near the lows. I've seen a lot of currencies, including my own currency here at home, getting absolutely smashed by the dollar, and it hasn't even really started to take off. This is the DXY, which is a basket of different currencies. It's an index, right, that measures the dollar against, for example, the euro, I think the German franc. There's a whole bunch of them. You can Google it to see what's in that list, and it hasn't even expanded yet. The expansion levels that we're looking at is target 1, first coming in at 103.43, and then we'll take it from there, because you could have a lower high where it squeezes back down. If it breaks through to that level, then we're looking at our next target at 105.79. So I'm very quickly just overviewing everything that we've actually covered this week and showing you in relation to what we said early in the week on Monday, that these were the levels that we expected to be tagged. We're coming directly into those zones, just like we said, and now we said we need to reevaluate and see once we get there what happens. Is this an opportunity to get long? Well, if you look at Bitcoin dominance is also coming down from the range high, which is pretty interesting, because if you look at some of the altcoins, you'll see, although Bitcoin is so red on the day I just showed you, there are certain altcoins which are starting to bounce, and I find that pretty interesting deviation back off of the range high, but ultimately they're still going to lose their dollar values, right? Even if they are going up against Bitcoin. If Bitcoin continues to sell off, you probably don't want to be too heavily positioned in highly risk on assets such as the altcoins. So we'll revisit this once the sell-off completes. Once the sell-off is complete for Bitcoin, and if Bitcoin dominance stays within the range, so back below the range high, and continues towards the downside and Bitcoin starts to bounce, then this, you never know, could potentially become a real opportunity to get into altcoins, but it's too soon to tell. Next, liquidity is absolutely evaporated. Look at the People's Bank of China over here. So absolutely no liquidity. It's completely gone. Let me quickly turn that off, guys. That thing will annoy me the whole stream. There we go. Okay, People's Bank of China liquidity is gone. You have the US liquidity is slowly driving up, but it's nothing to write home about. And then the most important one that we always look at is the USD stablecoin supply. We really need this to start to pick up over time in order for the market to catch a real bid. At the moment, it's an illiquid market. It's so easy to see. And this is why we've been able to nail the market time and time again. Because when you understand what environment the market is in, you can can implement the right trading strategies, which in an illiquid market, I believe the best strategy to use is a liquidity trading strategy where you focus on ranges as well as where liquidity is stacked, because price will always gravitate towards that. And I'll show you on today's show, actually in the low time frame, very, very low time frame, why there's still a possibility that you might get a big bounce very, very soon, but it could still lead to continuation lower into the medium time frame. So you really need to listen to me carefully when I talk about the time frames, because yes, you can be bullish on one time frame and bearish on another time frame, and you need to identify which trading style, which time frame works best for you, because I try and cater towards a whole lot of people, right? Some of you here trying to trade swing trade positions, or investors, you want to hold it for a long time, and then some of you are trading on a day-to-day basis. So as you know, the sequence of the show, I try to go for the high time frame guys first, and then we start to move slowly down towards the lower time frame trades as we move on through the show. So still talking to high time frame guys. Very, 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 very important levels over here. So let's just quickly turn some of this off so there is no confusion. So firstly, okay, let's actually start with that one. The moving averages on a weekly time frame, right? You're coming directly into the 200 weekly moving average. Now that is a very, very important level. If you lose that, so I have two lines in the sand to hold any sort of bullish bias as a swing trader or an investor. Those two areas of interest is going to be the 200 week moving average and then the 200 daily moving average. Now they're positioned in different places. Your first line in the sand is this one, where you can see we literally tagged directly into it, and you can see price is starting to react off of that 200 week moving average. If we start to lose that, then you need to look all the way down towards the 200-day moving average, which is going to be positioned somewhere here around 22, 23K. I'll show you that one shortly. The next moving average, let's quickly change this up, and we go into the EMAs, is you have the 21 and the 200 EMA, which is currently crossing. Now, this should also provide support. Now, why am I telling you all of this? I'm telling you this because if price fails to bounce here and you start to see closing candles happening underneath these levels, then it becomes an incredibly bearish picture in which you have a potential deviation back into the range. So if you look at Bitcoin and at price action, you'll remember that essentially for the couple of months, and I'll show you this just now on the daily time frame, we were range bound, right? Range bound. Then we broke that range down. We went all the way down to 15,500, deviated back into the range. And then I also outlined to you guys, there is a possibility. I always say to you, be careful in case this is a relief rally. We pushed up, and now that would mean if you lose those levels, you're going to deviate back into the range. And that could very quickly turn into a super, super bearish scenario. So where does that deviation get confirmed? Well, if you start to go below these moving averages, that being the 21 and the 200 EMA, you're now back into the range. And then your last line in the sand is really that 200 MA on a daily time frame. Okay, so that's weekly. Hope that makes sense. Our 4-day chart over here was always calling for price to come down towards this level. At the time when we were somewhere around here, it was a real toss-up or 50-50 odds whether we were going to go to 32K or 26K. As you can see, it chose its path. We're going towards 26K. I'd be looking for a tag of this level. Also coming in line with everything I've just shown you, $25,600 is the level. Total market cap, still got a bit to go percentage wise in order to tag its main level. It's got another 8% down to go. So we are nearing those levels where you start to expect a bounce. Look at total 2, tagging directly onto the trend line already. It's hit its level, and that might be the reason why you're starting to see altcoins start to bounce. Here you have this one is total 3. It is holding its mid-range over here. If it doesn't start to bounce from this level, then you're going to expect that it's going to move all the way down to the range low at 301 billion. Okay, Bitcoin. Now, this is why, despite the short time frame bearish scenario that's busy playing out at the moment, you could still potentially have an upside move. And very simply put, I explained that to you guys already, I think on Monday. I covered it almost every day. You're welcome to go back and look, but you still have a potential bull flag formation, although very, very sloppy. I know you look in the textbook, it's not going to look exactly like this, but it's the principle of accumulation versus distribution, right? So what do you have over here? This would essentially be what you would look at as your pole, and then you have an in spirit of bull flag where price is consolidating down into where? Into a strong support zone over here, and that means if it starts to break back above over here and you clear your pivot level, here's your pivot level, I'll read those numbers out to you, then you could start to get a breakout towards the upside whereby that $33,000 to $34,000 level is still a possibility. So let's zoom in and just kind of like dig a bit deeper on these levels over here. Basically, what am I saying? Well, your pivot level over here is 27,600. If you're an extremely conservative trader, you'd really be waiting for Bitcoin price to reclaim that level first, in which time it will switch the RSI back towards the upside, meaning the relative strength is moving back up. And therefore, you have an opportunity to get long with an invalidation below wherever the new lows were set, and then a breakout above this trend line, and you start to take out these highs at 29.5, and then you can start to potentially get to those high prices. Otherwise, anything that's below this pivot level, and every day the pivot level changes, right? So it's based off of the RSI. When the pivot level, when price starts to close down here, the pivot level will be lowered tomorrow. So come back every day. I'll update you on the pivot level every day. The moment price below 27,600 means that risk is towards the downside. Support levels are coming in over here at 24,718, and that is now your 200-day moving average. Okay, or excuse me, this is the 200 EMA. Your 200-day moving average, the EMA is coming in at 22,266. Next, Ethereum looks very, very similar. Same story. I'm just going to give you the pivot level over here. Your pivot level today is $1,833. Get back above that, risk will start to switch back towards the upside. At the moment, risk is down. 200 EMA is the light blue one coming in at 1691, and then your next one is the 200 MA coming in at 1553. So we're looking for reactions around this zone in the same way that we saw back here. Let's look at Bitcoin's one over here. So that bounced directly off the 200 MA. That was how I was able to time that. I literally bought on the exact wick over here, and I hold that position all the way up to 28,500, and then I would be looking to approach it in a very similar fashion. So it depends. I need to go, what I do is I set alerts, right? You obviously need to watch this live, so I'll click over here and I'll set an alert. Okay, price is coming near that level. Create the alert. There you go. I'll get an email, I'll get a ping as soon as price comes into that. Then I immediately log on to my trading view and I sit and I watch, and I go on a very low time frame and I watch what is going on over here while price happens to move into this area. And then I create a trigger plan on a very low time frame, like a 3-minute or 5-minute chart, looking for a break of structure, higher highs and higher lows. As soon as that happens, that's my signal. Bang, enter into there, stop just below, and off you go. So that's kind of the way I play it. I hope that helps. Let me know in the comments, does that make sense? I'm really trying to show you exactly how I do it, because I look at a lot of stuff and then ultimately it comes down, you only have 2 choices in trading. All this other stuff is just noise that we look at. There's really only 2 things you can do. You can push the buy button or you can push the sell button. That's it. There's nothing else you can do in trading. Cool. Next, we were looking at the RSI bearish divergence for quite a long period of time. You had 1, 2, 3 touches. Once you have the third drive, which came up over here, we knew most likely it's going to go down. 3 drives of bearish divergence, or any divergence, is always stronger than 2 drives. Typically, you don't see 4. So once that happened, we knew most likely we're going down. We started to track it within a channel, which I just showed you. Again, you have double confluence coming in all around that 25,500. It's definitely a buy the dip zone. If price comes into that level, it's a buy the dip zone. But again, you need to, you don't just blindly long it. You zoom in as it approaches there. You look on a low time frame, and then you watch and see how price action is unfolding. If it's giving you signs that bears are starting to weaken and lose control, how do you see that? Well, maybe you'll see that the candles become smaller and smaller towards the downside, right? As opposed to bigger and bigger. So the red candles on a low time frame, as you coming into this level, should be reducing in their size. And once it comes into that level, you might see a little bit of a reversal candle with a strong wick left behind. The following candle on a 5-minute chart might be a green candle, and then boom, that's your signal. You expect it's going to bounce from here long. stop goes below that wick, and then off it goes, and then we're looking for this trend to potentially continue. So I wouldn't say that it's completely over for the bulls yet. I just think that you need to be very, very cautious, because we're in that environment right now where at any moment this could flip back into what would have been proven as a relief rally as opposed to the start of the bull run. I think that's the $1 million question that everyone's asking themselves. Is this a new bull run, the start of a new bull run, the testing phase, or is this just the end of a relief rally and we're going all the way back down to 12K? We know that 𝗕𝗀𝗄 believes that. I don't like to make absolute statements like that yet. Okay. Looking at the head and shoulders pattern, we also identified this a very long time ago, over a week ago. You can see over here, you now have official confirmation that you have broken below the neckline. It's official. It happened yesterday. Break below the neckline, also broke below the strong horizontal region, and then you're getting continuation towards the downside. So remember this area, pink box zone, this lines up with all those important EMAs and MAs that I showed you as a confluence zone across the board, weekly, 3-day, as well as on the daily time frame. The measured move according to the head and shoulders would come all the way down to this $23,694 level. I wouldn't hold my breath on that. I would definitely start to consider scaling a little bit in, at least around this level. Next, let's move on. Bitcoin on the 4-hour chart over here. So remember, once the cross happens between the 50 and the 200 EMA, or the 55 and the 200, doesn't matter which one you're looking at, then you would expect a reversion back to the mean. The 200 is typically your mean. Let's say, for example, price starts to bounce from here and it moves all the way up. That's an enormous move. Bitcoin alone, that is a 7.25% move. So ultimately, what should you be doing on a low time frame? You should be expecting that shorts are about to get squeezed, and there's most likely going to be a bounce scenario at the very, very least towards the upside. We're coming into the demand zones, and then we can take it from there. Ethereum will look exactly the same, and you can see the stochastic RSIs on both Bitcoin and Ethereum up at the top here are starting to try and curl back up. And here's Ethereum. The problem with Ethereum, this is a big problem, is it's now officially closed below the key quarterly level, which means that any price action that pushes back towards the upside over here is going to meet a lot of resistance, and most likely it's going to get sold into. That would be an opportunity to go short, in my opinion, back below the key quarterly. And as long as price is below this key quarterly, you're looking for much lower prices. Okay, that is Ethereum. So I've covered Bitcoin, I've covered Ethereum on the low time frame. Let's see if we have even lower time frames. 15-minute chart, you can see already that reaction is starting to take place. Now, we were always looking for price action to basically bounce out of this zone. We're looking for a deviation over here. This was the initial plan. So here's our range, right? Liquidity on the bottom, liquidity on the top. And we are looking for that liquidity to get captured. So we were expecting that somewhere around here, there was going to be a deviation. This could still be that deviation, right? So we had the big wick down. And this is why I told you guys yesterday, once price gets into your area of interest, this was my area of interest. It was always the area of interest. What do? You zoom in. And what did we identify yesterday? I'm sure that you guys can remember, because I have the drawings that are still there. I haven't drawn the new ones. We identified that although it is bouncing, coming back into the range, we now want to see a proper sequence of higher highs and higher lows on a low time frame, and that would give us our official signal to go long. Did that happen? No. You had lower highs, lower highs, lower highs, lower highs, and lower lows. And that trend continued throughout. And that's why I didn't go long. I haven't gone long yet. So I'm still kind of watching price action. Unfortunately, you won't buy the exact bottom. Unless you want to be like 𝗕𝗀𝗕𝗃𝗧 style in this market, you probably won't buy the exact bottom. If you want to trade for long and you want to make money over time, you want to compound your results over time, then you basically want to be safe. And to be safe, this is now the level to clear. You can see the order block over here that led to the major breakdown. Ultimately, I would be waiting for price to come back above here. There's also an inefficiency, which is over here. So if you look at this area, so don't be surprised if you see price now pushing back up into this region, into here. and then it just rejects and comes back down again. So I'm just going to be observing and waiting. You can see prices already starting to bounce, but ultimately this is what I'm going to be looking for. I need to see this level completely cleared, which means price needs to get back above here. It will basically break back into what was anyway the previous range, higher highs, higher lows, and that's the trigger. This will start to look like a massive deviation potentially back into the range. And I'll show you as well, looking at the flows on the charts, the reason why shorts could get squeezed. But before we get to that, there's one coin I wanted to outline, which is performing phenomenally well in relation to the rest of the market, and that is Bitget token. So the BGB token over here. Remember, if you stake 4,000 BGB tokens, which will cost you just under $2,000 at the moment, you can basically get access into their launchpad. So here's their launchpad. Basically, hold BGB to get BIP1, which is their launchpad token, and then you basically get access into their airdrops. So I just wanted to give you an idea of what the previous one did. I don't know if you guys remember, I showed you guys the Go Sleep one. This was the previous one that they had. These are some of the returns. Go Sleep, you got access to that early round investment. That did almost an 8,000% return when it launched. So if you do want to participate in that, make sure that you go through to the link below over here, click on Bitget, sign up using my link. You lose nothing. You actually get a sign up bonus of up to $8,000. And it does help me. Once you've signed up, then go through onto the page and you'll basically buy your tokens and stake them. Click join now in the Bitget launchpad. Okay. Next, liquidity levels. Here are the liquidity levels. So this is on the 6-month time frame. This is why you can see potentially you could revisit. I just want to show you in relation. This was the market bottom. Look at the price action over here. That was the market bottom. If you look at this region over here, this was the USDC-D peg where everybody got scared. Price came into the 200 MA on the daily time frame and bounced directly off that. And then consequently, this is where price is now. So that's just to give you a picture in relation. Your liquidity is stacked over here. The main liquidity is at a price point of $22,500. So if you do start to lose that 25K level, expect that because it's a low volume environment, price action is most likely going to gravitate directly into this liquidity zone over here, capture that liquidity and go back up. Now, this is talking more towards the high time frame traders. This is over the coming weeks. If price doesn't reclaim key levels, I've given you the key pivot levels. If we remain below those levels, expect that over time you could start to gravitate towards that zone. Next, on the very short time frame, you can see how heavily shorts are stacked. Shorts have been absolutely chasing price towards the downside, and there's also in the low time frame, I'm talking about today and over the course of the weekend, a lot of liquidity over here. So look at the liquidity bubbles. These big bubbles over here suggest 25x shorts, 25x shorts. Here you even have as high as 50x shorts. These guys are 100% going to get taken out of their positions. You even have some 100x shorts which are stacked over here. So expect that price is probably going to rally up into this region over here, and that region is coming in around that $26,500, $27,000 zone. So you might see a very, very quick spike up. Let's see in relation to this. Look, 26.5. Well, look at that. That's where I just said you have your initial breakdown level. Price might push back into there, liquidate those shorts, but then it could still come back down over time. So that's today's price action for you. Next, there you have it. Longs got liquidated. Can you believe it? People were chasing that price action yesterday as well. And big liquidation over here for the longs. Other than that, I would say that I've covered everything. I don't know if there's anything else to mention. Let me know in the comments. Do you want to see something else? Also, make sure that you join the ByBit Trading Competition because we do have a couple of days left. Or actually, we have a while left. We have like the rest of this month. And there's 1,820 participants which have joined us. We can take up to 2,000 participants, which means that there's still space for you. If you win the trading competition, let me move my head, you get up to $40,000, or you can win a Tesla. That's your first place prize. Second place prize is a Rolex or $20,000, and third place prize is $10,000. It's very, very easy to join. All that you need to do is click on the ByBit link below, sign up, get a ByBit account, deposit $250, and then click the competition link, which is this one on the top. You'll be entered into that competition. So it's a great training experience as well, by the way. If you want to test your knowledge and you kind of want to learn quick, you want to fast track your process of learning, then this is a good way to do it. Other than that, I think that is everything from me, guys. By the way, I have to let you know as well that I'll be going to Bitcoin Miami on the weekend. So on Sunday, I leave for Miami. I'm not 100% sure exactly how the show times are going to work, because in Miami right now, I think it's 3 in the morning, 3:30, somewhere around there. And I don't think it's going to be realistic that I'm going to wake up at 3 or stay up till 3 to do a show. So I might do pre-records. I might change my time. I just want to make you very aware of that. I will update you on Twitter, and either way, we'll make a plan. I won't neglect you. We'll make sure that we're in this together and we can go on the journey together. That's it from me, folks. I will see you all on tomorrow's show, or excuse me, on the next show, Miami. I'll see you from Miami. Have a stellar weekend. I appreciate each and every one of you, and cheers for now.